Welcome to Libertex. The silver market has seen a steady climb since the end of March, after trading to the downside following a sharp rally experienced back in January. As we entered June, the silver market was nearing levels close to $30 an ounce that we witnessed back in February, and it's precisely at these levels that silver has lost steam in the past. This begs the question, are we due for another silver pullback, or will we continue to press forward beyond that $30 an ounce mark? In this updated silver price analysis video, we'll be reviewing the latest silver price action and what may be in store for the white metal as it hovers around resistance to either make a break to the upside or come back down for another sequence of sideways trading. A lot is happening in the world of metals, and silver, at the current levels, is still looking like a promising trade for traders who are looking at the bigger picture of recovery and a resurgence of demand from the industrial sector, as over 50% of the demand for silver comes from the industrial sector. So stay until the end of this video, as we'll be diving into the technical chart for silver to reveal the next levels of resistance and support for the metal in the short to mid-term. And for the best coverage on the world of metals trading, as well as the top crypto movers, stocks, and more, subscribe to our channel and like this video to help fuel our growth and commitment to providing you with the best information to strengthen your trading. So without further ado, let's get into the silver price analysis. Silver started the month of June with a modest continuation of the bull run we experienced throughout May, touching slightly past the $28 an ounce level, but was ultimately rejected in the successive trading sessions. Much of the price action for the silver market this month will be influenced by updated inflation data and jobless claims data. The updated inflation numbers are expected to be a catalyst for the silver market, as silver, similar to gold, tends to react to the upside when inflationary concerns rise. However, jobless claims are expected to drop from the previous reading, which has the tendency to strengthen the US dollar and decrease silver prices. Confirmation will likely come following updated consumer price index figures set to be released on Thursday, June 10th, and if the numbers reveal any indication of increased inflation, many analysts are preparing themselves for a resurgence of momentum into the silver market. Any contradiction could have the adverse effect, potentially bringing silver back to its support levels below the $27 an ounce mark. Aside from inflation, the most significant catalyst that silver traders are holding on to get a break above resistance and challenge the $30 level to the upside is reopening and a potential surge of renewed economic activity. Because over half of silver's demand is from the industrial sector, a boom for industrials could translate across the silver market and bring prices up with it. Let's now jump into the silver technical chart to get an overview of what we are looking at and how silver is trading now, as well as the nearest levels of support and resistance to factor into our trades. Alright, we are now in the Libertex terminal looking at the silver price action for the past 6 months, and while silver has been a relatively sleepy trade going deeper into 2021, it has really made some astounding progress and gains since dipping below $24 an ounce at the end of March and into April, breaking the $28 an ounce resistance before pulling back slightly to where we are now in June. So if we look back, however, silver still has an overall sideways trend of trading, and from the chart, we can see that whenever we near these higher levels, going from between $28 to $30, silver starts to lose steam. Unfortunately, that looks a bit to be the case with where we are currently trading now, following the latest rejection of $28. But there is still a glimmer of hope revolving around recovery and resurgence in demand for silver given its wide industrial application. So, with where silver is currently trading at around $27.60 an ounce, it is hovering right around the EMA found at $27.72 an ounce ahead of the updated CPI figures report. So if this report comes as negative news, silver may drop to the nearest level of support found at $27.50 an ounce, and on the flip side, surge to the nearest and most significant point of resistance at $28 an ounce. So if silver fails to hold support at $27.50 here, the next zone of support silver will need to consolidate within can be found right at $27, followed by $26.60 an ounce, and in the potential worst case scenario, towards the 200-day EMA at around $25.75. So on the resistance side of the map, first silver will need to break the $28 an ounce zone, and if successful, can possibly get enough momentum to climb towards the $28.25 level, and in the extreme case for the short term, around $28.75 an ounce. $30 an ounce is still a bit of a stretch for the short term with what we are seeing now, but anything is possible. So should you be trading silver in the short term, do consider bumping up some of your stop loss levels at some of these levels of support, and consider exiting the trade at some of these points of resistance found here. What are your silver price predictions for the short to mid-term? And do you think we'll see silver break the $30 an ounce level soon? Let us know your thoughts on silver in the comments to join the conversation with our analysts. And if you're interested in opening up trades and positions with silver, it couldn't get more simple. Libertex is the favored brokerage and platform for traders of silver, gold, and more, and opening an account is free and easy. Head over to Libertex.com or via the links in the description below to start your trading journey today. We hope you enjoyed this silver price analysis video, and if you did, we'd highly appreciate your support to help us make more content on silver by leaving a like and subscribing to our channel. We wish you a great month of trading in the markets and look forward to seeing you next time.